Good evening, doctors. This is Mona Kazi speaking to you on behalf of Hetero Healthcare. And Hetero Healthcare is elated and delighted to talk about the new Income Tax Act that has come, which is 194R. This becomes quite relevant platform to talk at this point of time when we all are suddenly understanding the new laws about finances and income tax, which is also going to impact us in terms of association with ourselves, with the companies. Now, when we talk about this law and the Income Tax Act that is come in recently in July, we have Mr. Sufia with us. He is the expert in this field of the law and finances, specifically about this 194 Act, where he's guiding certain doctors individually as well as the pharma companies on how do we take up this law positively and what all can be coming under this law, what is permissible, what is not permissible. uh, we are there to answer your questions. We'll have a brief preamble on this for about 15 to 20 minutes. After that, the session can be open to questions. We will definitely try to answer the questions which are feasibly answerable on this platform, or else we are there to talk to you through our field as well. So I'll hand over this session to Mr. Sufia, who will take up the session for IT Act 194R.
Good evening, everyone. So this 194R is a part of the Income Tax Act, TCS sections. Okay, it was introduced by Finance Act in February. It was been implemented from 1st July 2022. Now, this section has caused a lot of confusion among all the industries, but specifically I will be covering only the pharma companies related transactions. Okay, so I will start my presentation in a very brief form. And what are the topics that I will be covering under this? 1 second. So what I will be covering, I will first be covering what is meant by TDS, what is section 194R, what is the purpose of introducing 194R, scope of 194R, what is 194R, implications on the doctors, advantages and disadvantages, and question and answer session. Okay. So first, let us understand why tax in India. So my certain friends would be having the questions like why to pay such huge taxes in India. We are paying direct tax, indirect tax. The taxes has been charged on everything. So why tax in India? Okay. So it is true that India does not offer social security and free medical facilities as being provided in some developed countries. But we need to ponder over the issue with larger canvas. We need to appreciate that the government has to discharge a number of responsibilities, which include healthcare through government hospitals. Usually they provide free service without any cost to the poor, educations, government schools. The government also provides gas, electricity as a concessional rate. Of course, the major expenditure of government has to be incurred on national defense infrastructure developments. Taxes are used by the government for carried out various welfare schemes, including employment programs. Okay, so there are a lot of lakhs of employees in various departments and administrative costs has to be borne by the government. So basically what is happening, the government has its own budget for the year. So they have their expenses planned. So for the revenue purpose, we as a citizen have to pay the tax to the government. So the tax ultimately gets used for the benefits of the citizens. Thus, on considering these various duties of the government, we need to appreciate that we must pay tax as per law. We have to act like a responsible citizen for our country. The taxpayer in general feels that taxes are a burden, and it is human tendency to avoid payment of tax or at least minimizing the tax liability. But that is not correct. In earlier laws, tax rates were also exorbitant. Like if you go to prior to 80s, the rate of tax was as much high as 97%. But now the scenario is fast changing. Through the tax rates have been lowered, but still our country lacks desired tax culture like development is. So the tax rate in India basically is a progressive rate. Okay, as the income of the citizen goes higher, tax rate increases. Also, it has been said by Justice Holmes of US Supreme Court that taxes are the price for civilization. Okay, so it is a time tax is no longer considered as a burden, but price for civilization. Despite considering efforts for widening the tax base, still the number of taxpayers in a country is about 80 to 7 million people. Okay, which is just 6.25% of the overall population. So there are about only 8 crores taxpayers in India, direct taxpayers in India, which is too small for a country. In contrast, in the US, about 45% of the population pays taxes. There are many reasons for this. Part of this has to be the fact that many Indians do not earn enough annual income to even qualify to pay income tax. But a larger factor has to do with the lack of tax culture. So this mindset has to be changed. We have to think that is a responsibility for us to the pay the tax for the development of the nation. It is no longer that it could be avoided or we can do some tricks and turns and reduce our taxes. Taxes, whatever the taxes we pay, come back ultimately to the people by way of government policies. Okay, so the government spends on infrastructure, roads, railways. Okay, also the defense part is also quite huge. So all the money we are paying is going in all these purposes. This was just to introduce why tax is payable in India. Now let us quickly go through meaning of TDS. So 194R basically is a TDS section. So what is a TDS? If someone is not aware, I will be touching upon the point. The concept of TDS was introduced with aim to collect tax from a very source of income generation. So what was happening that if some person is earning the income but is not disclosing their income, government was having the losses. So what they did, they implicated sections which the payer has to first deduct the taxes and give that the money to the deductee. So in this case, the income is directly reported to the government. So there is no dependence on the deductee that they should report their income. It is ultimately captured by the government at the source itself. So as per this concept, a person deductor who is liable to make a payment of specified nature to any person, that is deductee, shall deduct tax at source and remit the same into the account of central government. Okay, so the deductor, before paying the deductee, have to deduct the TDS and pay to the government, and the balance portion can be paid to the deductee. Okay, so this is the basic concept. So what are the example for it? A tenant deducts TDS on payment of rent to the landlord under different sections 194I. Companies deduct TDS on payment to lawyer fees, CA fees under 194J. A pharma company deducts TDS on doctors for his professional fees. Okay, so you may be covering under instance where your TDS has been deducted by pharma companies. So what is TDS? The tax is deducted at source. So government get the data that this person has earned this much income and the tax has been deducted and reported to the government. Now that you cannot avoid it unless it has been wrongly shown, you have to pay the taxes on the income where TDS is deducted. Okay. So now we come to our main section, that is purpose of section 194R. The purpose of introducing the new section 94R is to plug the possibility of tax revenue leakages, that is the tax evasion, in business and profession. A few companies claim expenses for business promotions while offering gifts, perquisite or benefits to distributor, dealers, channel partners, as per the normal traditional practices which has been going for many years by the business entity. Now, what was happening, like the companies were taking as an expense of the gifts, you can say, or the non-monetary benefits giving to the professionals. And the professionals were not reporting it in their income tax returns. So the government thought they want to increase the revenue, they want to bring such transaction under income tax, so they have introduced this section. So now most of the transactions in the daily which were not covered in earlier sections have been covered under this. So the recipient do not report this in their income tax return because this particular incentive is in kind and not in cash. So certain incentive may be in kind also. Okay, so it is not hitting their bank account. They are not showing in their income tax returns, but the government want to test such transactions. So what they did, they introduced 194R. So that now the area of transaction that government is covering has increased considerably. Okay, so the main purpose, they want to increase the tax collection, widen the tax base, and put all the unorganized sector into organized sector. So what's the meaning of 194R? The Finance Act 2022 inserted a new section 194R of the Income Tax Act 1961 with effect from 1st July. The new section 194R cast an obligation on the person responsible for providing any benefit or perquisite to a resident to deduct tax at source at 10%. So what is the tax rate here? 10%. Whether the benefit or perquisite is in cash or in kind. Okay, so let me give you an example. Suppose I am a CA, I win a case for my client and he gives me a car. So that is a in-kind benefits. So that will be section 194 will be applicable, and the deductor before giving to me the car, he have to collect or pay 10% of the value of the car to the government. So the benefit or perquisite may or may not be convertible into money. So all the bank transactions have been covered, or the transaction where we are providing in kind have also been covered. Transaction where something will be in kind, something will be in cash, that also has been covered under this section. The benefit or perquisite may or may not be convertible in money, but should arise either from carrying out business or from exercising a profession by such resident. The tax shall be deducted before providing any benefit or perquisite to the resident person. The important point here is that what transactions will be covered? The transactions which are in the nature of business and profession. Personal transaction will not be covered. Like if I am giving a gift to my employees, okay, that will not be covered. If I am giving a donation to my relatives, family members, that will not be covered. Okay. So anything which is in relation with the business and profession, that will be covered under 194R. And what is the threshold for it? How much? What is the threshold for deducting tax? That we will be seeing here. This deduction is not required to be made if the value or aggregate value of benefit or perquisite is provided or likely to be provided to the resident during the financial year does not exceed 20,000. So if the value which the deductee is receiving from the deductor is less than 20,000, 194R will not be applicable. So what is the threshold limit here? 20,000. If it's exceed 20,000, the tax will be deducted in the whole value of benefit or perquisite, including 20,000. So let us take an example. So doctors receiving gift voucher of 50,000 from pharma companies. Okay, so the amount has exceeded 20,000. Now, what amount of TDS will be deducted? TDS will be deducted on the whole amount of 50,000. Okay, at the rate of 10%. So that is 5,000 as per 194R. So what we let us elaborate what we have discussed here. So the threshold limit is 20,000. The rate of tax is 10%. And what transaction it will be covered? Nature of business and profession transaction will be covered. Personal transaction 194R is not applicable. Now, scope of 194R. Nature of income. Any benefit perquisite provided to a resident. So the deductor and deductee both should be resident. If I am giving, or if pharma company gives any doctor which is a non-resident, this section will not be applicable. Any benefit perquisite enlarges the scope of this provision to a range of transactions. Okay, the primary checkpoint before applying 194R is that the benefit perquisite is provided to a resident and arises from business or exercise of profession by the said resident. So this we have discussed earlier, that it should arise from business and profession. Let us take quick examples. A pharma company distributing free medical samples to doctors or hospital. So 194R will be applicable. Now there are certain cases going on for court, and the various implication has been made by pharma company also that it should not be applicable to 194R. But at the things which currently stand, as of now, 194R will be applicable. A pharma company distributing free samples to end consumers, that is general public, for clinical trials, 194R will not be applicable. So why it is not been applicable? Because the samples has been given to general public. The transaction is not being arising due to some business or professional connections. Okay, so that 194R will not be applicable. Now, if pharma companies provides car to a stockist chemist after reaching of a certain sales threshold, then 194R will be applicable because they are providing to increase their businesses. So 194R will be applicable. donation of gift given by Mr. X to Mr. Y, 194R will not be applicable because this is the nature of transaction is personal. There is no business connection. If someone is giving donation, he is not getting any business benefit from the other person. Okay. So we will just go through what are the terms for arising from business. The expression arising from business essentially implies that the benefit of perquisite must be in nature of business receipt or revenue receipt. There must be a direct nexus between the business and the benefit which has been derived. The two tests for determining 194 are whether the payment is connected with the exercise of SSC's profession or it is merely in appreciable of personal qualities. So what we have discussed, business transaction will be covered, personal will not be covered. Hence, benefit of perquisite derived from his business or professional capabilities are covered under 194R. If benefits are derived from in personal capacity, they are not covered under 194R. Now, what are the transactions which are exempt from 194R? So 194R covers transactions other than employer-employee relationship. Okay. So if some employer is providing any benefit, perquisite gifts to his employees, that will not be covered under 194R. There's a different section under income tax act which will cover that. So what are the transactions which relation to doctors which will be covered under 194R? Free medical samples distributed by pharma companies, any kind of freebies received by doctor from pharma companies, be it cash, voucher, the transactions, if they are attending any conferences, okay, for business exercise to increase the sales, that will also be covered under 194R. We will be seeing later the case studies for it. So let us quickly go through a case studies. Okay. So I've basically covered the case study in relation to pharma industry only. The company ABC is a pharmaceutical company. It has administered a new drug, and to obtain recognition, it distributes free samples to Dr. S. Okay. So company ABC is providing samples to Dr. S, a medical practitioner. So what was the purpose? To obtain recognition. Does this benefit perquisite come under the purview of section 194R? So there are two situations. If Dr. S is an employee at an XYZ private hospital. Situation 2, Dr. S is a consultant as an XYZ private hospital. So let us tackle the situation 1. So in this case, Dr. S is an employee. So what will be the implication of section 94R? So there are two transactions in the situation 1. What is happening? Company ABC and XYZ private hospital. Okay. So they are not an employer-employee relationship. They are providing the sample to XYZ or private hospital only on the basis of business transactions. So 194R is attractive. And the company ABC will have to deduct TDS of XYZ private hospital. Situation 2. Suppose that XYZ private hospital received the samples and has provided to his employee. Dr. S. So what will XYZ private hospital also deduct TDS of Dr. S? No, because employer-employee relationship. They are in employer-employee relationship, hence 192 is attracted and 94R is not attracted. So 194R will not be applicable. So what will happen that ABC company will have to deduct TDS of XYZ private hospital. So if some doctor is employed in a private hospital and they are receiving samples, so they can say that our TDS should not be deducted, but the TDS of the organization should be deducted here. Now let us quickly take an example on situation 2. So company ABC and XYZ private hospital are there, and Dr. S is a consultant. He is not in the employer-employer relationship. So what will happen there? So company ABC, when they supply the free samples to XYZ private hospital for business purpose, section 194R is attracted as is one in the earlier cases, and they will have to deduct the TDS. Now, secondly, when XYZ private hospital is giving the free samples to Dr. S, who is a consultant on their board, then they are also liable to deduct TDS under section 94R. Because now he is not an employer-employee. He is a consultant. Hence, 194R is attracted and XYZ hospital has to deduct TDS of Dr. S. Also, to remove such double TDS, government to its circular has told that ABC company can directly deduct TDS of Dr. S instead of hospital, only in cases where he is a consultant. Okay, so now let us go through a case studies in relation to conferences or CMEs which are being conducted or organized to various association and third parties. So Dr. S has been invited for a conference as an attendee in Goa for one-day conferences. Dr. S get travel and stay from organizer each way. Events are in relation to CME, means only for educational purposes. Pure science around a molecule is being discussed. It is a scientific CME. So now question arises, is 194 are applicable on the tickets and stay of the attendees, speakers and everyone? So answer would be 194R would not be applicable. Okay. So why it won't be applicable? Because it is just an educational CME. There are no personal benefit, business benefits derived from the attendees. So in such a case, if it is there, then 194R will not be applicable. Now let us change some condition under this. So Dr. S has been invited for a conference in Goa for one day. Dr. S has been invited for conference in Goa for 3 days. There was a mistake. Yeah, it was a 3 days. Now Dr. S get travel and stay from organizer. Events are related to CME. Pure science around a molecule has been discussed. Dr. S attend with his family for the conference and gets the travel and stay from the organizer. Okay. So what will happen here? 194R will be applicable on travel and stay for the family. Okay. 194R will not be applicable for Dr. S for the day of the event, but a family and personal stay will be covered under this, and pharma company are liable to the deduct TDS under 194R. Now suppose the conference in Goa is for 3 days. Okay, and Dr. S arrives 3 days. The conference in Goa is for a single day, but Dr. S arises 2 days before to attend the conferences. So what will be the implication of 194R in such a case? So in such a case, he is arriving, he is doing a prior stay or post stay. So in such a case, 194R is attracted. So on the day before the conferences, if he's staying or air tickets or other benefits, that 194R will be covering under it, and TDS will be deducted. So, because that will be in the nature of other benefits which has been provided to the doctors. Okay. So what the crux is here, if it is CME for educational purposes, no business benefit has been derived, and if the CME is for 1 day, 2 day, and only for that period doctor is attending the conferences, that 194R is not attracted. If he is doing any prior stay, post stay, or getting any other benefits which are only in personal use, means all the doctors are not getting the benefit, but he is getting such benefits, then 194R will be attracted on such benefits, and the companies will be liable to deduct TDS on it. Now let's twist this example. Dr. S has been invited for conference in Goa for day. Dr. S gets travel and stay from the organizer. Events are in relation to brand promotion for particular pharma company's products. So if you are attending an event where you are doing promotion of the brand promotion of pharma companies, okay, or you're recommending such products of the pharma companies, and it is a specific event of only one pharma company, then 194R could be implemented on hotel, flights, and other services provided. Okay, so only educational CMEs as per the current guidelines is allowable, and it is out of scope of 194R. If a business purpose CMEs have been taken, then 194R will be applicable. And the benefit purchase is provided in relation to business or from the pharma companies will be taxable. So pharma companies will deduct the TDS of the attendees, and the attendees will have to report this income in their tax return and pay the due taxes on it. So what I will suggest to doctors that you keep data of all such things which you are attending or which you are getting any benefits or gadgets or vouchers from the pharma companies. Now, what about the brand reminders? So, if doctor has received brand reminders from pharma companies containing brands of products of pharma companies of items, so it is a natural practices that they receive brand reminders of certain examples. I will give you like pen, calendar, diary, caps. Okay, so 194R is not applicable. Okay, it is not applicable on brand reminders of low value item. Okay, suppose I'm getting a brand reminder of suppose Parker pen of 25,000, something like that, then it will be included in 194R. But what they are generally giving to all the publics on that 194R will not be applicable. Okay, if I'm getting a cap where they have done some branding, so 194R will not be applicable. But suppose I'm getting a Louis Vuitton cap of 25,000 MRP, then this 194R will be applicable. Okay. So I've just prepared a chart like what are the do's and don'ts for doctors. So what I will tell my friends that the responsibility for deducting TDS is on the deductor or pharma companies or from the person which you are using the gift. So you should not take too much headache like is it applicable, is it not applicable, what are the conditions. You should not uh, take headache of all those things because the responsibility is on the deductor. But what you must ensure that I have prepared a checklist, so that you have to keep in mind. So what doctor must do? Doctor must maintain data for all such transaction occurring on a monthly basis, where TDS is being deducted or benefit purchase is being received during the financial year. So you must have some, if you are practicing, then you must have some account person in your team. We should maintain all the data on a monthly basis, which event you are going to be there, what date you are going to be there, what was the purpose for attending the event, if you are receiving any gift, and if you have shared a PAN card to any companies, for what purpose it was shared, and have you received it. You should maintain a note of everything. Because ultimately what will be happening, there is a form 26 AS of income tax act which reports all the TDS transaction. At the end of the year, you will not be aware that why this company has deducted the 194R in my name. So you have to keep basic data for all such transaction with you. If possible, get a copy of engagement letter agreements for CME being attended, which clearly mentions the purpose for which CME is conducted. So if you are going to any conferences, if you are sharing your KYC, get a letter from the organizing committee of that for what purpose it's been conducted, okay, and what are the for how many days, and what are the benefits which you are getting under this. Any transaction which is not of SSC is being shown is on 26A as reported to the deductor. So what I will suggest, that 26A is basically what is a form, individual form. If you log in into your income tax return, your CA must be aware there is a form 26A form which shows all the transactions which are being deducted under TDS. So quarterly, I will suggest that everyone should review it. Okay. And if they find any variance, it could happen. There are a huge number of data that certain other person's data transaction have been reported under your pen, and the government will issue notice to you. If only pen name mismatch happens, then also the income gets booked in your return. So you have to thoroughly check quarterly which other transaction have been reported. Are the transaction genuine? Are the transaction of yours only? And if any variance, you shall ask your CA accountant to report it to the government. Okay. And if it's from some other companies, then you have to ask the pharma company also why my pen number has been mentioned here. I have not incurred or services, but still my pen is under my pen name, the income is being shown. Okay. Also, what you may do, ask the companies before sharing PAN card, Aadhaar card, for what purpose it's being used. Also, whoever deducts your TDS, they have to issue a Form 16A. So get Form 16A from all the deductors where TDS is deductible. So that will help you to file the income tax return later on the year. Because there are so many transactions happening during the year that after the financial year, you will not be aware for what transactions tax has been deducted. Check 26AS on quarterly basis from your accountant CA and report any variance with the income tax department. So the facility has been available in the income tax department where you can reject the income which is not yours. So you can take the benefit and report the variance with the income tax department. And if you need received any notice from the department, then please act promptly. Reply to the notice. Okay, because various departments are inter sharing their data. Income tax department is sharing their data with GST department. So any variance, you will get notice from income tax department also and GST department also. So you must be aware of all the consequences. So what I will summarize this presentation, that what doctor have to be do, they should not be worried that on which transaction 194R is applicable or not applicable. They should be aware of the rate, but they should always mention data of all the such transactions which are occurring in the current year, and check that 26S on regular basis, get form 16A from the clients wherever TDS is deductible. So all such practice has to be implemented if they want to get compliant. Otherwise, what will happen that the income variation will come and you will have to bear the taxes on it. Okay. Now, what is the advantages and disadvantages of 194R? So advantages include tax revenue, tax evasion will be curbed by this provision. It is like a time bomb which has been implemented by income tax. So all the industry are having trouble with this section. Okay, so only time will smoothen this process, but till that we have to keep in mind whatever is applicable and whatever is not. So there will be increase in tax collection and growth of formal economy. Doctor will have to be compliant as large data is being captured by income tax authorities from various agencies shown in their annual information statement of individual. So it is not like before in 90s or in the early 2000s, like various transactions are not getting covered and we have incurred an income, but we have not shown to the department. Okay, so everything is now digitalized. Every transaction is being reported to the government. So now we will have to keep ourselves compliant. So we avoid the notices. So various data have been shared to the income tax authorities like cash deposit, cash withdrawals, credit card spends, forex spends, foreign travel data is also being shared by them. Any variance with IT department data will lead to income tax notices and hefty penalty and interest if found guilty. Okay, so basically government says that everyone has to be now compliant and all such transactions which were not getting covered before is now covered under 194R. Now, what are the disadvantages? There are still a lot of ambiguity in a lot of areas. Like free samples also, there is a confusion that it should be, pharma industry are thinking like it should not be taxable, okay? So only time will remove such ambiguity. In various court proceeding are still going on, which will only be cleared in due course, which clarification from income tax circulars. So the income tax is also issuing circulars from time to time. So after they have introduced 94R, they have introduced 3 circulars. So more circulars are to become in the due time. So you will have to keep yourself updated relating to your business. The scope is widened, but you have to understand what are the transactions or what are the areas which you have to get known and be compliant with it. Okay, so I finished my presentation. We can just go for a question and answers.
Thank you for the wonderful insights, Mr. Sufia. I'm sure this would be helpful for the doctors. While we have some questions like, please tell me any option other than amount taken in the account.
Sorry, I'm not getting the question.
The question is, please tell me any option other than amount taken in the account.
No. There is no option. That's why that one section 94R is implemented. Okay. So what if the transaction which were covering on the receipts which you were receiving in your bank account was already covered. Okay. So to avoid this, there were certain transactions which were going on in the industries. Okay. So now they have included all this. So gift vouchers, gift cards, everything will come under 194R. Okay. So if you are receiving anything, any income relating to your business, all will be covered under 194R. Okay. So there is no way now to avoid any taxes on any income which you are getting from any clients.
Right. Thank you. One of the doctors have also asked whether chamber modification, that means the in-clinic modification, the clinic modification If sponsored by a company, would that come under 194R?
Yes, yes, that will also be covered under 194. Any benefit which are getting in terms of your businesses will get covered under 194.
Right. We have some few questions also. Some doctors are saying, of course, you've covered the points like what are the advantages and disadvantages of this act. And the doctors have also asked GST implications, where whether they should give, the GST implications if it is valid for them.
So if certain doctor is a practicing doctor, GST is not liable to them. Okay. But if they are getting any other income other than their medical practitioners and above the value of 20 lakh, then GST is applicable to them. Okay. So I have seen in my industries various examples when the government has, when the doctor has collected huge amount from pharma companies during the year of about 80-90 lakhs. Okay. And that is in the nature of their personal capacities, the professional capabilities, not on their medical practices, and they have not even taken the GST number. So I've seen various GST notices myself when the doctor have collected about 80 lakhs 90 lakhs during the year from various pharma companies, and they have not taken the GST. So if you are getting more than 20 lakh amount from in terms of your professional capacity, like if you are providing any services to pharmaceutical companies relating to content and like that, and if you are getting the amount is more than 20 lakh, GST is applicable to you, and you must get the GST and get the GST number for it. So I've seen various doctors also having the GST number, and they are collecting the GST and paying the due taxes. So the threshold limit here would be 20 lakhs. So other than your practice, medical practices, if you are getting more than 20 lakh in a year, you have to be registered under GST, and you have to collect the GST and pay to the government.
Okay. So one of the doctors have also asked that whether, once the agreement is made, as you covered the point that you should make agreements for the medical education or the advisory, would they be considered as employees of the organization?
No, no. It could just be a one-page engagement letter or just mentioning the details of the conferences like that. Okay. It will not be an employee-employee relationship.
Right.
So if it is for medical purpose, the event is going on, then 194R will not be applicable, but it will just be as a proof of services that they went there. This was the nature of the conferences what taken place. So it could be just a one-page letter.
Okay. Okay. Great. And is, the private hospital bill given to a patient is more than 20,000. So will the hospital add a TDS on the patient's bill?
No, no. No, TDS should 194R is not applicable in this because the service is provided to end user consumer. Okay. So they will not have to add the TDS. 194R will not be applicable here.
Right. Okay. And this question was also asked that would there be tax implication for small articles like pen and wall clocks and
No,
perfumes?
that
I think you've already covered
yes,
it
I've
during
covered
the
it.
session.
So
Yes.
that will depend on the value of the receiving gifts. Okay. So generally what the pharma companies or any other companies distributes to the general marketing purposes, that will not be covered under 194R. But someone is getting a special, like a pen, usually it costs 150 rupees, 100 rupees, but someone is giving about the value of 20,000. Okay, so that will come under 194R. So it will depend on the value of what you are receiving the gifts.
Right. So if the doctor is getting amount from the company and getting the deduction of 10%, will he come under the 30% tax slab?
So basically 194R is just a tax which has been deducted as shows 10%. Okay, but the individual tax liability will come when he will file the tax return. So what would happen? There would be some doctor where TDS will be deducted at 10%, but he may be liable for the tax of more than 30% also. That will depend on his personal capacity. What will be his personal income tax would be liable under this. Okay, so it could be very possible that the tax rate would be more than 30%. So 10% he has been deposited by the collection, and 20% more he would have to pay at the time of filing their returns.
Okay, okay, great. So, if uh, so, there's one query come that if any doctors are getting benefited with gift cards
Hmm.
or any amount in the bank which is lesser than 20,000 by a pharma company, will
Hmm.
the tax be deducted?
No, no. So if you are getting, suppose from a receiving X pharma company during the financial year, of the value of gift card is less than 20,000 per deductee, then 194R would not be applicable. Okay, so that during the financial year, the amount should be less than 20,000 per deductor, you can say. So if
Okay,
X doctor is receiving, suppose more less than 20,000 gift card from two pharma companies. So in such a case, the amount that he received will be 40,000, but TDS would not be applicable. 194R will not be applicable. The amount is receiving per person is less than 20,000.
okay. In a case where the tax is deducted, how can it be recovered? The TDS is deducted by the company
Hmm.
in assumption that the transfer will be more than 20,000. What would be the implication, or how can the doctor get that TDS back?
So what 194R say, it says to the deductor like pharma companies or any other industry that if certain transactions are covered under 194R, you just deduct a tax, 10%. You should not see whether the income is taxable in his hands or not taxable in his hands. So there could be a situation when certain TDS is deducted of the doctor, but that such transactions are not taxable to him. So what he can do in such a case, he can file his return, he can claim the refund of the TDS.
Okay, great, great. So I think we have majority of the questions answered
Okay.
by Mr. Sufia, and we'll be more than happy, doctors, to understand your understanding and whether you need more assistance regarding the IT Act 194R from Hetero Healthcare, which is a noble initiative taken by us. I hope you have welcomed this initiative, and we are happy to see you on board with us today. I would also like to thank Mr. Sufia and the associates for giving us such wonderful insights on 194 Act. Thank you so much. Thank you, doctors, for being with us today. Thank you.